Hi, this is Daria Shabbat with CorporateProfile.com. Today I will be speaking to 27-year-old Tim Sykes, who transformed his bar mitzvah money into over $1 million investing in stocks. Tim was recognized as one of the top 30 investment professionals under the age of 30 by Trader Monthly in 2006. He has been featured on media sites like CNBC, CNN, Fox News, The New York Post, Reuters, and The New York Times. Today we're excited to put him in the hot seat on Corporate Profile to talk about penny stock trading and what he really thinks of Wall Street. Let's meet Tim. Tim, tell us, how did you do it?
I mean, it wasn't all at once. It was over several years, but it's just one trade at a time. When there's a hot penny stock, you know, you see whether it's better to buy or whether to short it, and you're just trying to profit. You're trying to take the meat of the move, and I did that rinse and repeat thousands of times, and it adds up to millions of dollars.
And so you were shorting penny stocks from the start?
Well, the first million that I made was just buying. I was like Forrest Gump. I was a total idiot, and I was just buying breakouts when they hit new highs. I didn't even know about boiler rooms. The news kind of surfaced like a year later, and then I began short selling. So I made my first million buying breakouts, second million shorting. Same pattern, same kinds of stocks, just, you know, there's different opportunities from long and short.
So what is the upside and downside of penny stocks, would you say?
I mean, they're so volatile, they're so predictable. A lot of people say, oh, manipulation is so random. I mean, I think, you know, penny stocks are manipulated, but the manipulation is pretty predictable. You know, the manipulators aren't that smart, as you know, you meet a lot of them. So, you know, it's just about trying to learn what's good and what's bad. The risks, obviously, if it's an illiquid penny stock, you know, and you take like a 1 million share position and it only trades like 10,000 shares a day, then you have a problem. That's how I lost a third of my hedge fund at the time. I believed in this company. So you can't really believe in the companies. You really have to look at more like the economics and supply demand. Like if the company has a hot product, how long will it be hot? How long do you think this company can last? Do you think they'll hire promoters? Will those promoters be effective? How high can the stock go? How much volume can it trade? So if you think about the right variables instead of the common like sucker philosophy where it's just like, oh, will this company be the next Microsoft? You can really dig in, and I think the odds can be on your side because there's not much competition down here.
So speaking of promoters, what do you think makes a promoter competent?
You know, I think it depends on the size of their email list and how polluted their email list is. You know, a lot of promoters send out far too many emails, and when the stock crashes, they don't warn their people, so the people just don't believe them. So I think inevitably, since the promoters are paid to get a stock price up, to get it, you know, attractive looking for financiers or so insiders can dump, you know, they're going to burn their lists. So I think promoters, if they wanted to be responsible, you promoters out there, you know, I think that you should just be more honest. Like there's nothing wrong with saying, look, this stock, I think it's headed higher because maybe like 50 promoters are on it, but don't say this is the next Google. I think there's a huge market for honest promotion, and we haven't really seen that yet.
Okay. So my next question was gonna go into whether you think it's morally wrong to promote a bad company. What do you think on that?
I mean, all penny stocks are pretty much bad companies. I don't think it's wrong to promote it. I think the way that they promote it is wrong. You know, where you try and lure people in, where you say, look, like this stock, I put a $12 price target on a 10-cent stock. I think that's bullshit. I think, you know, some people are going to fall for it, but they're inevitably going to be bitter when it doesn't happen. I think you say, look, like this is a 10-cent stock. You know, there's a lot of promoters attached to this. There's a lot of volume. They're announcing a new product. Maybe it goes to $1. You know, you don't need to say 120 times upside. You can say, look, there's 10 times upside potential, and then if it hits it, then you're a hero. So I don't think that it's wrong to promote at all. I think the way that it's been done for many years is wrong, morally, and, you know, it doesn't work. You know, most promotions fail. Like, I'm a short seller of promotions, and most promotions just aren't worth shorting because the stock doesn't go up enough.
Tim, what makes a good short?
So shorting is a fine art. It's not an exact science. So, you know, you could do your fundamental research, you can do your technical research. It's a question of finding shares to short and figuring out when the stock will drop over the next few hours, days, weeks, months. You know, almost all penny stocks drop over years, but there might not be shares available to short. So it's, you know, when I'm shorting, it's mainly, ideally there's a negative catalyst, like the street sweeper is going to publish like a negative report or something, or, you know, a negative report just came out on Seeking Alpha. And then ideally it's breaking through technical levels that are, have been support for hours or days. So you're building the indicators, and it's just a question of like if there's like 5 short selling indicators and only 1 positive indicator, then it becomes a better short. I mean, all these stocks are good longs for a while if they're promoted correctly, but then the odds shift to shorting because the promotion can only last so long. When you have all these marketing dollars, they go out to emails, they go out for articles and message boards and chat rooms, and then eventually it fades. So when the promotion starts fading, that's when I really look to jump on aggressively.
Tim, in one of your interviews, you said that you would short Wall Street. Why is that?
Yo, fuck Wall Street. I'm sorry. I don't like the compensation. I don't like how unethical it is. I don't like the customers being treated the way they are. I think Wall Street is inherently the right industry. Like, it should be great. But everything is kind of fucked up, where brokers are getting paid huge commissions. They don't care about how their customers do. Investment bankers are compensated yearly for bonuses, how short-term deals do. They don't care how it does 5 years later. So I think if we adjust everything, and kind of tinker with it, we'll be better off. I don't think that's going to happen anytime soon. Wall Street is all about making a lot of money the quickest. So I would short this because I think that this model will not last. Already, like you have this whole movement of like homeless people. Occupy Wall Street right down the street.
Happening tomorrow. Yeah.
And it's purely because of the way that it's structured. People should be loving Wall Street, and unfortunately, that's just not the case. So I'm young. Give me like a few decades, and I'll change it. But right now, I'd short it.
I like your words. Tim, if we want to learn more about your teachings, where can we find it?
Just go to timothysykes.com. I'm very humble. I don't like to name websites after myself, but that has everything. I've got like 5,000 blog posts, 600 videos. I just try and teach from what I've done right and wrong. I made millions, but I've also lost hundreds of thousands. So hopefully my experiences can, help educate people and entertain them.
Absolutely. Thank you so much.
Thanks for having me.
I'm Daria Shabbat with CorporateProfile.com. I just spoke to Tim Sykes. Thank you for watching, and please tune in again for more interesting interviews and hot financial news.